Hey everybody, welcome back to my channel. If you just saw my last video, which was on 2022 interior design trends, you'll notice I'm in the same outfit and in the same room. I'm in my hotel room actually in Portland right now. But I thought, what better place to film a video about the market in DC than in Portland, Oregon? I am on a mini vacation out we were in Seattle and now Portland. And so I have a day, I'm about to start doing the tourist thing, but I wanted to film these videos while we're here. And today's video is, how is the market and are we seeing a slowdown? So my screen is just down here. I've got all of my stats and stuff in front of me here. So if you see me looking down, that is what I'm looking at. But I'm gonna put your images of what I'm looking at here. So I'm just gonna scoochy scooch, as Angie says. All right, it is mid-April. Well, now it's the end of April, but these stats are mid-April. And there's a lot of conversations happening right now about, are we seeing a market shift? And so I'm going to get to that, but I want to start by talking about what is happening. What did we see in March 2022 and what is that pointing us toward? So the first thing here, we have the Bright T3 Home Demand Index, which says it's at a level of 119, which is moderate. The median sales price is basically still at a record high. It's just about 1% less than what it was last year. Days on market are at all-time lows. Inventory is still low, but buyers seem to be less active than last year in the sense of we're seeing less showings and less pending sales. So that's our quick summary. Let's jump into some specific numbers here. We have Montgomery County, the median home price for March 2022 is $538,500. Prices are up 7.2% from last year. And in DC, we have a median home price of $660,000, which is up 4.8% from last year. Montgomery County's new pending sales is down 11.8% and DC's down 8.2%. So this is where we were seeing those same numbers about, there's less showings, less pendings. So Montgomery County showings are down 22.1%, DC's down 21.7%. So those are sort of like some of the main stats, and I'm going to just sort of ad lib a little bit here just to give some more time for some of these screens to be popping up with images here about sort of what's happening. And I have all of these charts on my website. So if you click over to my blog, you can, pull these up and look at them for a little bit longer than trying to capture these videos, in a pause on this video. But the question people have then is, does this mean that the market is slowing down? Pending home sales are down. Home showings are down. These are both indications of a slowdown. But I feel like once you see one thing like this, you can't say, oh, that's it, it's a slowdown. I think that in the past, we have been quick to say that. I think these are things that we need to keep watching, and we need to keep watching to see if the trend continues. But there's a lot of other things that can be going on as to reasons why you're seeing less showings and you're seeing less pendings. I mean, there's less inventory. Less things going under contract, and honestly, a lot of things going sight unseen. People just saying, I need a house in this neighborhood. They're all kind of, the same. I've seen all of the last 100 that have hit the market, and I'm just going to write. I know where I need to be ballpark wise in order to try to get an offer, and you're just hoping that yours is the one that's chosen this time, and then you're moving in and dealing with whatever you've gotten. I think we've seen a lot of that as well. So that to me is not a slowdown still. I'm not saying we won't see one. It would be great to see one because I think for everybody, even though sellers love having a hot seller's market, it's not a fun experience right now. And buyers definitely need a break in our market for sure. So interest rates also rose in March. I think we need to make a note of that. So here's a chart of what's been happening with averages for popular mortgage types. So what we're seeing here is this is the 30-year fixed, the 15 and the 5-year ARM. So the average 30-year fixed interest rate was 4.67%. It was 3.18% a year ago. So this is the highest number that we have seen since December of 2018. And I found this quote from Zillow. Don't shoot me for the Zillow quote. Here it is. Markets are anticipating more aggressive action by the Federal Reserve based on comments from many officials after the March Fed meeting. Consensus is now predicting several 50 basis point hikes for the federal funds rate this year, which will lead to further upward pressure on mortgage rates. That is Paul Thomas, the vice president of capital markets at Zillow. So obviously we know that there's going to be some impact here. I think we've been talking about both the fact that interest rates are going to rise and that there's been kind of a need for them to rise for a while now, and now we're starting to see that happening. These are still in a long run historic perspective of looking at interest rates. These numbers are still historic lows. I mean, I think anything less than 8%, you can say it's still low in the grand scheme of the history of the American housing market and some of the other prices that people have paid in the past. So I think what we need to do is watch mortgage rates, see how this affects April, because a lot of this started, in March, and then watch pendings, watch showing numbers, and see, is there a market slowdown? I think we're all sort of hoping that this year it will kind of normalize and it will become a little less competitive. I think, sellers love having no contingencies, but I think it's reasonable to think that a buyer should be able to do a home inspection on the house and get a mortgage in order to move forward on that house. And the fact that we're seeing real pressure to buy homes with cash, sight unseen, with no home inspections, or at least not extensive home inspections, is sort of in the long run unhealthy for everybody, because the buyer who's buying the seller's house is having this experience, but the seller's also having the same experience when they're buying their next property. So everybody is impacted by this, and I think we'd all be better off if it calmed down a little bit and the competition sort of went back to what normal levels are. The DC market is very competitive, and it's going to continue to be. There's going to continue to be a lot of interesting ways to make competitive offers. There's going to continue to be a lot of cash in the market because that's the reality of the DC market in general. But I think we'd all be happier with a little bit of, some easing of some of the stress and bringing back down to some of the normalcy. So I think that even if we do see a little bit of a slowdown, it would be something that everybody could appreciate. So let's just hang in there. I don't want to call it this month. So next month I'll do another update and I'll tell you what we saw in, the next month's statistics and if we're continuing to see this trend or not. And then I'll come back and tell you more about it. If in the meantime you want some more specific numbers, because these are very general, all of Maryland, all of Montgomery County, all of DC. These are very general. If you want something that's tailored to what's happening in your market, or you want to kind of get a sense of that, feel free to just ping me, even if you're not thinking about moving or selling and you just kind of want to get a little bit of a better sense on like your particular market. Feel free to reach out to me. All my contact information is down below in the description. My email, my phone, you can text me, you can email me. All my social media accounts are down there. So feel free to reach out if there's any information that you need. So I hope that this How's the Market coming to you from Portland, Oregon was helpful, and I can't wait to do the next one and see where things are going. Okay, bye.